Good evening, friends and traders. I'm Nalnakshi Swami, welcoming to my channel, Smart Index Edge. In my previous video, I've introduced to you about a regression channel, that is one indicator coded by the person DGT. So already you might have become familiar with that. So I thought, let me introduce to you another indicator which is far more advanced than the linear regression. So I'm going to talk about polynomial regression in trading. Polynomial regression in trading, okay? So it is also used for the identifying the trend. That is the most difficult part for the traders to identify the trend. They do mistake while trading. So first of all, the trader should identify the trend, then they can take the trade properly. And this polynomial regression can help you spot trends with curves showing how price action may slow down, reverse, or accelerate. For example, if the polynomial curve bends upward, the market is likely in an uptrend. If it bends downward, the trend may be reversing. So you can use it for support and resistance. Like linear regression, the linear regression line may act as support and resistance. Even this polynomial regression, this curve often acts like a dynamic support or resistance line. So strategy is buy when the price touches the lower part of the curve during an uptrend, sell when it touches the upper part of the curve during a downtrend. I'm going to explain it to you everything on the chart. First, listen to me because you need to understand about this polynomial regression. Once you understand the concept, then only you can trade better. Okay? So it is used for spot reversals also. How? If the curve starts flattening, either it bends upward or bend downward. Instead of that, at the top, suppose if it has become overbought or anything, there if it starts flattening or changing direction, it might signal a reversal. So strategy there, what you need to do is watch for a break above or below the curve, as this could indicate a potential breakout or breakdown. So for a very effective using of this indicator, combine with other indicators. See, for confirmation, for everything, you need other indicators to combine. So polynomial regression is most powerful when used with additional indicators like RSI, TWAP, or moving averages for confirmation. If the curve bends upward and RSI shows oversold conditions, it could be a great buy signal. Combining with the RSI and TWAP shows increase, average price increase. Say, for example, you are on the 15-minute time frame, and the next follow through candle, the average price increasing, and RSI oversold condition, and the curve is also bending upwards, then it is a perfect setup for you to go long in that condition. Okay. What is polynomial regression? You might have a question in your mind, what is polynomial regression? So polynomial regression is like drawing a curved line through the points. For example, instead of being limited to a straight line. For example, in linear regression, what happens is data is collected and calculated, a straight line is drawn. Instead of that, here what happens here is sometimes what happens in the market is market will be very choppy, it goes up, down, and all those things. And then it becomes very difficult. So it draws this polynomial regression by its mathematical calculation. It bends down, it follows it can bend and twist to better follow the ups and downs of the data. This makes it more flexible for capturing complex movements in the price. When the price moves up and down, I'll show it to you on the chart. Think of it like this. Imagine the same hiking path. For example, you are hiking to some mountain or something. See, in that hiking path, you will climb up, climb down, up and down, you will be there. But instead of just connecting the start and end with a straight line, so you curved line that follows the dips and peaks along the way. This is how it is, polynomial regression. So, how they differ from linear regression differs from polynomial regression? Shape of the line. So, linear regression is always a straight line. Polynomial regression can be curved or wavy depending on how complex the data is. So, depending upon the data, it becomes curved and wavy. So, linear regression is best for simple and consistent trends. For example, how many times you might have seen price starts moving up and straight away it comes down. For that type of cases, it is very useful, and also it can be used for longer term uptrend or downtrend. Polynomial regression useful for more complicated trends where the price zigzags a lot. So, a complexity is linear regression is simple and easy to understand. Polynomial regression is more advanced because it uses higher level of mathematics. Okay. In trading terms, linear regression is looking at the big picture trend. It is simple and good for long-term trend identification. Polynomial regression is like zooming in on the details, putting lens through all the details of the price movement. It is better for spotting short-term changes and complex patterns. So we can use it for intraday trading. So let us go to the chart. Let me go to the chart and see. Let me disable this and I'm going to apply. Go to the indicator section, type in polynomial regression extrapolation. I'm selecting this polynomial regression extrapolation from the person Lux Algo. So select this, make it as favorite and apply it to the chart. After applying it to the chart, I'm going to the settings. See, you choose the length because since I'm using for an intraday trade, 50 to 100 is very ideal for the 15-minute chart. This one, you can select 50. If you select for 50, it will calculate back the 50 candles back and it will give you the regression line. Okay. So it's, see, I have selected for 50. 1 minute, I'll remove drawings. I have selected it, it has started from here. Suppose if I select it for 100, it goes back. See, in 15 minutes time frame on single day, how many candles are there? there are 24 bars are there. Suppose if 24 multiplied by 3, if you want 3 days back into 3, you will get 72. So you can apply for 72. You can. So anything between 50 and 100 is good for intraday. And extrapolate means it is extrapolating for another few candles, and it will show you the future price movement. So you can select for 5 candles from here, or you can select for 10 candles. So I have selected for 5 candles, and the degree, polynomial degree, I have selected 3. That is enough. 2 or 3 is enough. You should not select more higher degrees. Let me change some higher degree. There will be lot of whipsaws. You can select, you can tweak, and you can do that. See, for example, in 15 minutes time frame, you could have. Suppose if I select for 3, it becomes smooth. It is becoming smooth, right? If I select, let me tweak it and select different angles. Let me select 8. What it does, we'll see. See, it is, it is curving much, right? So better 3 is enough. 3 is enough. For according to your, you can back test and you can do whichever fits, you can select for the, but for intraday, 2 to 3 degree polynomial degree is enough. So I'm not going into the detail of calculation of this polynomial regression. You must understand this is a regression line, curved regression line for identifying the trend. So how do you combine this with for my intraday trade? For example, I have selected for 72. That means it comes from 3 days. So you need to, here you can see around this area, this curve has become flattened, okay? Flattened down, indicating price is going to showing weakness in the, so you draw a line exactly at this level. That is the 23,278 is your the polynomial regression reference point. Let me take the tool. I'm not able to take the tool. 1 minute. Is it possible? No. Anyway, you can write it down. Text also I'm not able to because something. Anyway, 23,274 is your reference point. Anything below that, already price has started showing because it has curved down. And the beauty of this indicator is that it has been coded for green changing to red. So as a price action trader, you are not going to take immediately for the trade. See, for example, on Friday, what happened? The market on Thursday, this is Thursday, market showed some sort of weakness and market came down around 10:15, it rallied, right? When it rallied, you can go back to even 100 days. If you change it to 100, at least you will get 100 candles back. And this even 100 also. We can go further, 200. Huh. So you can see the polynomial price as started showing flattening out, indicating weakness. See, if you follow the price action, you should also, together with that, you blindly, you should not, you should be able to analyze the price action. What has happened in the price action is here it made a double top, price started coming down, and it was the retest of this level. Retest failure of this level. Already weakness had set in. It is a very quite useful tool for the people who sell the options, they can utilize it. Keeping this as the stop loss, they can sell 23,400 call option if they would have sold probably uh, on which day? 21st January. 21st January, you could have captured in lot of money. Positionally, you could have sold and you could have kept it because it is showing this. And combined with TWAP, see, I am using TWAP for to take the trade. See, I know the trend is down. Already trend, it is bending up, even though price has climbed up, it is bending down, and then here TWAP price is there, average price is there. So you can, for intraday, you can utilize this as stop loss and also reference TWAP, this polynomial regression line, the price is below that. When price gap down and when it was testing this polynomial regression line, your strategy is to sell and rise. See, from here, if you would have sold, or if you would have taken put option, you could have made money. So let me go back to the put option in this. Okay. Let me go back to Nifty. Okay. Now let me go back to options. So we'll select 30th January, today's trade. No, 27th, that is expiry. We'll select the put option, 23,000 put option. Okay. See, here, I've selected the put option here. See, the trend is up, right? When the price, even the linear regression line, that is also price has climbed above the linear regression line. Immediately you cannot, in the first candle, you cannot take the trade. So when the price came and tested this polynomial regression line, that is the green line, what you are seeing, and the dark here, the straight linear regression line, it points to 157. If I place the cursor on the polynomial regression line, you are getting the reading of 163. So when price comes and tests this level, you could have taken position and you could have close the position when it hits the linear regression upper channel. So when the price hit that level, you can see you could have pocketed in from 163 to 254. So the low of this candle is 168 to 254. That is 34 plus 80 points you could have easily captured with the help of trend identification and also linear regression. These are the two indicators. Suppose I am not applying this polynomial regression. Linear regression, okay? Let me remove the linear regression. Let me combine my analysis with the RSI. See, RSI, the trend was up from the previous day. This is Friday itself. The RSI price has shown strength by climbing above its moving average and also 50 middle line. So it was showing strength. While closing, the RSI reading was around 59. That is above the 50 line. So here, when price gapped up in the first candle, gapping up, we cannot take the trade. So when it gaps up, previous day closing was 121. It gapped up to 150 and made a high of 270. So 217, immediately you are not going to take the trade, but the trend is up for the put option. That means trend is down for the underlying. So when it came and hit that is the strategy. When it comes and hits there, you could have taken a position in this. Let me change it to 5 minutes time frame. You could have gone long over here and closed your position over there. The 15-minute is very better to take the trade. You can identify that. And you can do, see, by taking the anchored VWAP, you can find where the price can become overbought. Correspondingly, it became overbought in RSI, and you can see so clearly price is above the VWAP, and these are the two standard deviation. When price hit this two standard deviation, it was unable to sustain. It started coming down. Okay. Still the polynomial regression line is ascending. Price has come below this. We need to see what will happen in the market. So suppose in intraday, suppose if it gives some dip, still it is bullish. Still polynomial regression line, the curve, the average line, it is here. It has turned into positive here. So around from 96, it has gone up. Even any dip in intraday, you can see for that. For the underlying, what is happening in the market. So underlying, let me remove the TWAP and enable the RSI for tomorrow's trade. RSI, it has come up and climbed, and again it is making a double top and it is showing downward movement. So after extrapolating, it is giving 22,764 as the target. Tomorrow, we need to carefully watch where it is going to end. Let us go back to the daily time frame. And if you see on the daily time frame, the RSI has crossed below and it is below this line. Below this line. So trend may continue. Trend may continue downwards. We need to see, I had already marked a support is nearby for the market. I had mentioned market can come down to 22,797. It has come down to 22,786. This was mentioned in my morning video yesterday and today's morning video. So the order block is here. Market has come inside the order block. Suppose if it turns around tomorrow and closes above this line, this is the order block. That means if it starts closing above the 22,941, we can anticipate for a reversal in the market. The down move can continue tomorrow little bit till 22,707 or 600. So I have not made the video for the levels. I'm going to post it later in the morning, tomorrow morning before market opens. You can look for that. So this is an indicator with the linear regression. The polynomial regression is another advanced indicator you can utilize for your trade, for trend identification, also confirmation of your entry, and with the help of RSI and TVAP, you can utilize and you can enter into it. Today's trade was simple. You could have taken good trade. Here, when market gap down, the first instance when it started resisting, you are getting the polynomial line. So this is the strategy, sell and rise. It came down and you got one trade and also another trade around 12:50, market went down. So there was no momentum later. Actually, for an option buyer, it should be, momentum should be like this. Okay. Okay, friends. Thank you very much for listening to my video. I hope this will help you all for your trading and intraday trading to make it simple and precise. Thank you very much. Narnakshi Swami signing off.